Hey guys, this is Elliot Wave Sage. Want to do a market update? Like always, none of this is financial advice. Always do what's best for you. Okay, guys, here's the market. Overall, bigger picture. We could be in some kind of consolidation. This pattern overall could be correcting the whole grand super cycle in a flat pattern. That is possible still, and we're in this three-wave move. This is our danger area for where the reversal of the flat takes place. We get the C leg, we break the A, and then the correction's over, life goes on. Now, um, but what do we do now? Well, I think amateur trader will be trying to top tick and guess and anticipate this move. I want to short, I want to short, I want to short. And yes, the conditions are ripe for this rug pull. There's a lot of fundamental metrics out there right now that show the market is stretched. First, the weekly RSI. We're in the overbought territory. Every time we've been in overbought territory, shortly thereafter, we had a collapse. You can kind of see. Sometimes, the only time it really hung up there was in the 17 run. But most of the time, when you hit this overbought area, the market's at danger of collapse. Okay, so that's a warning sign, right? That's a warning sign. The other warning sign is fundamental metrics. Our valuations are kind of getting ridiculous. They're getting to the point where they're going beyond the dot-com era in terms of overvaluation. So that's that's getting out of hand. We also aren't seeing other stocks participate in this move anymore. None that you would typically see. Of course, the small caps, but now even some of the other technology stocks just aren't participating in this surge, right? So that's a warning sign. It's a warning sign. So all these warning signs are showing you there's some rot underneath the market that isn't healthy. We also are coming up on this trend line here. If I connect this peak, the dot-com peak to the 21 peak, we're going to be running up against that or very, very soon here. This is in the danger area. This is in the danger area for the Dow. The Dow is in the danger area. It's running up into a channel resistance. The weekly RSI is overbought. So you have all these conditions, right? All these conditions tell you, we need to start being cautious, right? Have to start, understanding where we are. Okay, so what does that mean? What does that mean? Do I just start shorting? No way. But what it also means is once we start to see the turn, it's time to leave the party. It's time to leave the party. But we have no sign the turn has happened yet. But this labeling also could be changed, right? What if this is a 1, 2, 3, 4, 5, and then B is done right here? It's possible. It would be a very ugly wave. It's possible. It's not probable. If I look at the daily here, we're still in that cycle. One of the things I like to look at on the daily is you are getting that RSI breakout on the daily here. So now we should see more upside follow through. And then we'll see if we could push and break this peak, which would be ideal to finish off the C leg here. Now the weekly is already overbought. It could continue to be even more overbought. The 4-hour, again, we broke the downtrend. More than likely, we're going to extend higher. So here's the thing. I do still see a more extension, but we are getting in. There is some danger and rot in the market still that needs to get sorted out if you believe in Moon Boy and want to negate what I have here. We also had some bearish developments in the 10-year. That is bearish for the market, guys. And there's really no other way to label this. Okay. What happened here is not healthy for the market. Okay, so I wanted to see more downside. More downside in a 1-2 and a flat. Okay, in a flat. Now, we needed a 3-wave move up. We broke that peak. So whatever this is not 3 waves anymore. It's 5. It's 5 waves. Okay, so if it's 5 waves, this is 5 waves, then could it be a flat? An A, B, C? Well, I can't even force a flat here, guys. There's no flat. So what does that tell me? It tells me that the 10-year may have bottomed, and if that's the case, that's going to eventually topple the markets. And that could also be a warning sign. The first real substantial warning sign there could be more danger in the market than appears. So we have the Dow in the danger area, and now the 10 years in the danger zone, and an expanded flat pattern that just ended here. And so what's going to happen? What's going to happen? There's a lot of possibilities in this 10-year now. One idea is we finish this 5, and then we get a pullback. And the market enjoys that pullback. The market enjoys this. And the market goes higher. To finish this move. And then when we come out, B starts taking shape. This starts to turn. It's not obvious yet to the market, but it starts to turn. And then people will pick up, oh my God, you look where yields are now. Oh my God. And then it'll consolidate, hang around. And then at some point we get a breakout. And once we get that breakout, game over. Game over for technology, which will drag everything down. So the yields have always been the ticking time bomb, because we had 5 waves up, which means we knew we need another 5 waves up to either end the sequence, to go to negative rates, here we go again, or continue the rally. The question is, where did this 2 end? Here would have been better. This is telling me you need to now start to pay more attention to the market. Okay, this you need to pay attention to it, because if this plays out, just like I have it here, if this plays out, it's over. The run's over in the indices, guys. It's over. It's game over. Yes, there'll be rallies as these, will go up, without drop it. So there'll be rallies all the way. But this will trap bulls. These will trap the bulls. But underneath the rally, this is telling you danger, danger. Now, what could save the bullish forecast, guys? What could save the bullish forecast? So there's only one possibility that I could see right now. W, X, Y, A, B, C. So a little bit higher, and then we resume lower. So that's possible. And go down. The market will surge higher, then we'll get the small caps and everything will melt up. This will be, if this plays out like this, then I look at the Dow as maybe another pullback, and then a massive rally, and then we stop out somewhere up in this upper area here. So this this is this is very important to see how we play out. Unfortunately, though, this didn't happen. This didn't happen, and because this didn't happen, there's no more tailwind I think we're going to get from the 10-year and from rates. We also knew this was in danger because the 1-year hit a buy area here, and it started to reverse. The 2-year, the same, starting to reverse. If the 2-year takes this out somehow, which would be very difficult before the 10-year, that will also confirm that this isn't happening. So why do we care about all the 10-year? Because it's been pretty correlated with, as the 10-year rises and accelerates, tech sells off and energy runs. Okay, that's usually been the trade, right? That's been the trade so far. We don't know what we're going to see, so we'll have to wait. But for now, this needs to be watched, and we need to see how this plays out. How this plays out going forward. And then, like I said, to me, this looks like some kind of 5 waves at the moment with a pullback perhaps even starting now. And again, this pullback could be deep. This could be deep. Now, like I say, I could always be wrong, but this is a warning sign. The 10-year, I'm telling you, is a warning sign that the market may be exhausted and rates may be ready for the next leg higher sooner than anticipated, in a very ugly structure, because there's no real good way I can label it besides an A, B, C running flat type pattern. But you'll have to keep an eye on it. I think it's just something that, okay, that's a data point that makes me a little more cautious than I was the day before. How about the dollar index? How's that going? We had the wedge breakout, right? Wedge breakdown, which is good. But if we take out this high at 105, we have a connector wave for this move. So what does that mean? It means the dollar's going to go much higher and more than likely break this high, which all more likely would take it up to here. What do you think that means? That's probably going to mean the market's going down, guys. I mean, it's hard to see the market going up. Now, the crazy thing is the market has been going up as the dollar's risen. But I do believe at some point that that dynamic will rebalance itself. As you can see, we would break this high and we would come up to these areas. So where does that all, where is that? Let's see if we break this high. So we need to keep an eye on that. But right now, it's no worry. So the dollar's a tailwind for the market. So no concern there. No concern for the dollar. I'm not concerned. I'm not concerned. You know, this to me looks like, you know, something like this. 3. So if this is corrective, we won't get this 5th wave. If we get the 5th wave, then the chances of this being set is strong. But if we don't get the 5th wave and we start to surge next week, then again, you got to be cautious. You got to understand what's happening. So very important. Do we get the drop? And then, yeah, we can rally up again. That's fine. But this will give us more confidence that we'll be going lower. So those are 2 new developments in the market. How about the VIX? How's the VIX doing? Well, the VIX is also something we need to keep an eye on. We have this 3-wave move, a connector, 3 waves here, and now we're in a connector. It looks like it needs more downside. But then we should get this move, and we should finish Y. That's coming, I do believe. So to me, the VIX is still showing market support. So I think in the short term, you could see more market upside. More market upside, potentially even more market upside as it chops around here. The 10-year pulls back down, more market upside, right? As this drops and corrects this cycle potentially. More market upside, and then somewhere here we come out. No one really notices. Then about here, market is panicking for some reason. The dollar index never made this fifth wave, starts coming out, and then all of a sudden the VIX is somewhere down here, starts to come out, and then the Dow is somewhere up here and starts to reverse. And our favorite stock, Nvidia is finishing this wave 5, and we're about to go into a cycle degree 4, which will be at the same magnitude in time as the correction was in 21. So a significant correction, maybe 6 to 8 month correction. We'll be going right into that. Okay, Microsoft could be top NB. What if Tesla, drops lower? Apple breaks this pivot and goes lower. And then what if even our stock Adobe, bounced, but it forms a connector and takes another leg lower down here. You see, this is what I'm looking at in the market right now. That concerns me. So what I'm saying is, then oil finally dumps down in the dump we need. So this is what I'm looking at, and what I would say is the market should not be sold off or not shorted yet. The market should continue higher for now, but you need to be more attuned to what's going on, and just understand that, because the Dow Jones is in the danger area, the SPY is almost in the danger area. I said 511, 512. We're almost there. Danger area. I don't care what these counts say. This is Fibonacci danger area. Danger area. The triple Qs, we're almost in the danger area. Okay. The IWM, I believe, needs to finish this out. It needs to finish this. I do not believe the IWM is done like this or here. I believe this needs to finish, and perhaps it will finish if the 10-year can drop in this 2-wave coming up. So, and then when it's finished, we should be in these areas. So then you have to really ask yourself at that point, maybe it's time to ring the cash register and say what a great first quarter we've had trading, because we've been in this long since December, into December, this area, and the market has melted up, just like we said, all the way to these red areas. And maybe it's time to soon, but not now, but soon, to kind of say it's time to enjoy our profits. Enjoy profits. Now, this is what I'm looking at. Now, that's the bearish case and how I see the bearish case developing. Now, the bullish case is Moonboy. And I'll show you, there's a couple charts of Moonboy that you need to also be aware of. The long-term stochastics have broken out, guys. I don't know what this means exactly. Again, I don't make the market. Let me see if I can get this. This is the quarterly RSI. We clearly have broken out of the downtrend line. What does this mean? We're in a new uptrend. The grand super cycle won't end until this line breaks. Now look, it almost broke here. But they saved it. So the secular bull market is still intact. And in fact, it actually signals that perhaps something much more bullish is emerging that people need to be aware of. You see how you had this little blip here in the overbought and you came down? And then look at that. Same thing, little blip, overbought, about the same level of excitement. We come back down and we go up. What if this emerges? Something like that. This happened right around 90s, the mid 90s, right? That's what people are like, oh, this is really 95, right? 96, not like 2000. So you got to respect that. The secular bull market could still be intact. However, we've seen these before. We've seen this breakout, and down we go. This was in the 60s, the final little push higher before the collapse in the 70s. Okay? And then, of course, you could draw the trend line here, saw the break. More importantly, you could draw that line, and then we broke back below it, and you could have went short on that, secular short. So when I look at these lines, this is a secular bull market ending when this line breaks. I promise you that will happen. But until then, there's no secular, there's no Dow 2000, 6000 coming, guys. But when that breaks, then that could happen. Sure. Who knows? Who the hell knows? The monthly is also have a breakout. The monthly broke out. Again, bullish. And this isn't secular. This is cyclical now. A new cyclical bull market. Is that a new bull market to 2029 now? 28, 29? You got to be aware of that. That's Moon Boy. Again, we found support right where we needed to. The market was saved. It was saved. Again. So here we go. So those two long-term stochastics tell me if I'm bullish, I'm like, okay. If that's the bullish case, what does that mean exactly? Well, maybe we get something like this to reset the oversold weekly. A 1-2, and then we run up in another 1-2, right? Where I just tweaked the labeling a little bit, I call this a 1. Instead of an A and a B, I call this a 1 and a 2, a 3 and a 4, and a 5. And we still get this pullback. And hell, we could go all the way back down. We may even come back down to these areas. But it just is another 1-2. It's a 1-2, 1-2. And then out. And the secular bull market continues. So, something to keep in mind. But nothing to really do from a trading standpoint. But it is evidence that there's no secular bear yet. There's no secular bear started yet. And in fact, we could be going into some kind of acceleration in the next couple years. So just keep that in mind. But I did show you the shorter time frame. The weekly it looks like it's getting ready to get exhausted. And whether we get B or a pullback in wave 2, we don't know. But man, there's going to be a dramatic pullback, I believe, on the horizon. Okay, guys. So that's what I saw in the 10-year. I'll go through some of the other items just real quick. Bitcoin, of course, is really tricky. It's trying to figure out if it wants to go to new all-time highs or not. Now, the longer it hangs out here, the more bullish that is, I believe. It's just burning RSI. Look at this shallow pullback. That's super bullish, guys. I mean, if this can continue. So this supports prices to 73,000, new all-time highs, beyond. In a boom explosion that no one sees coming in price. I don't like to sell it, guys. I just don't like to sell Bitcoin right now. Okay. And if you've been following me, we should be in from these levels down here. And again, we've been trading it, and we actually called the bottom on my video. I did an emergency update to call the bottom when we got the reversal conditions. Took profit here. Forget where we took profit, somewhere around here. And then got back in the market here. So missed a little bit from 28 to 37. We missed that, but we managed our risk because it could have still been a three-wave move. But now that we know it isn't, I think you could be more confident as long as the structure holds up that I have here. Oil, like I mentioned, the energy market kind of sucks, and so does natural gas. This is a short area, but if we do break this pivot here, it's going to take another leg higher. We'll do something like that to go to 84, 86. So you definitely need to be careful shorting it here. But this is something to keep an eye on. Silver, so far, the pivots have held. There's no reason to get concerned. There's no red flags in silver until a pivot breaks, and they haven't. They've tried. I mean, again, there's an extreme fascination of shorting silver by institutions and banks for God knows no right reason. I mean, there is an extreme obsession and fascination to short silver. But when this breaks out, I do believe we'll see a couple funds and even a bank collapse that has been doing that game, and they'll probably need a bailout, like we saw in the nickel market from that one big investor. I believe when silver finally breaks out and we're trading in the 40s and we break 48, you're gonna someone huge is gonna need a bailout. They're going under because they've been just shorting, but they're losing control of the market. Whoever's shorting this is losing control. They're not. The pivots are holding. The buyers are not scared. Strong hands have entered this market, and they're buying more. The short sellers are losing control of the silver market. Just in a break of this high could cause a massive short squeeze and unraveling that we haven't seen in many years in this silver market. I'm just telling you what I'm seeing in all these 1-2s, and so far the pivots have held. Now the pivots break, the short sellers win, and the market will panic and it will unravel, and we'll have to stop out and go from there. But I am playing this long for now, and we'll see what happens. We'll see what happens. But the short sellers are losing control of this market little by little by little. Gold just missed our buy area at 1980, and then essentially V-bottomed. So this is a warning sign also to short sellers that the precious metal market is turning bullish. It could be turning bullish. It could be turning bullish in a wave 3 of 3. Okay. Natural gas sucks right now, right, guys? It's just getting, and I do think there's a capitulation event that will emerge, and then it could be a buy again. I don't like it anymore. The structure is in a go to zero structure, guys, and we do know these things could go negative. So don't. I mean, if you're gonna long this thing, you need to you have to really manage your expectation. This pivot really had to hold. It almost was unthinkable for it to break because of the implications of technically of what it means by break-in. It really is a go to zero situation. You gotta be really careful in it, guys. That's all I'm gonna tell you. And I think that's good. I'm gonna do a live stream and we'll answer your questions. So that's a market update. So in summary, the market is expected to continue higher, even though on the shorter time frame we could still get another pullback and another wave 2 here, like I've got. I do expect more upside, but it's looking like, to me, I'm seeing the bearish case emerge. One point I forgot to make is, we're not seeing other stocks run, right? No follow through on trade desk on that pump. Actually, we're seeing decline. We're not seeing follow through on Shopify anymore, right? We're actually seeing breakdown. right? We already know GME stopped us out, right? We're not seeing follow through on the other stocks, and of course we have these other ones that we like that have been running all year last year. Now all of a sudden they don't run, right? They don't run anymore. They're like the SYM, IONQ, right? They're, they're in danger of dropping. Like they're all in danger of dropping, and it concerns me. I am seeing underneath the market some bearish signs emerging. Guys, some bearish signs. Mercado Libre finally looks like it peaked, dropped, right? The Palo Alto network peaked, multi-month correction on the horizon. So we're not seeing follow through. And then we have Supermicro trying to make this wave 5. And again, I gave you guys this buy area, by the way. Remember, I gave you guys this entry. I hope you enjoyed that gains. Again, I may be wrong. GME was, maybe Elliott Sage was wrong, fine. But I'm usually right. Look guys, I mean, and honestly, it should probably take this high out. But then once it does, then it's a wave 5, and it could really, then the bubble could pop. Um, the other option is it drops now, and if it does that, you have another entry for another dip buy. So you got this going on in the market. I am starting for the first time to see the bearish, the cracks in the market form with the 10-year, but it's not time to sell yet. It's time to take notice and just keep an eye on it. If you're a bull, the only thing you have going for you is the secular stochastics are supporting you still, but the weekly seems like it's about to peak. So it seems like inevitable at some point we're going to hit a peak here, and we're going to reverse, and it's going to be a hard reversal. And the question is, will we correct this impulse from all the way there and come down, or are we going to correct the grand supercycle down to C? No one knows, but that's what's on the horizon. The other option is Moon Boy, and we just go to the moon, and we're not ready to say that that's the case yet. And to see that happen, we need to see breadth improve. We'll need to see all those stocks that have sold off start to surge. The rest of the market has to start surging. If it doesn't happen, Moon Boy won't happen. And then also, guys, keep an eye on China, right? China held its pivot, but now China's in an area where it's going to be judged by the market. It hit the short area. So China is also telling you, the bearish case is starting to develop again. But if it can surge and negate the bearish case with a break above, say, 17,800, 17,800, then perhaps Moon Boy will come to fruition. And what would cause China to do that? A massive stimulus that they decide to flood the economy. Again, this would be 3 waves. So this would be corrective. It would be a 1, 2, 3 of 3 vertical. If we don't get that, it could be just another wave 5. We'll break the pivot, and then this will tell you Moon Boy is negated for good, and then it's a bear market, and China's going to get obliterated this year. All right, guys, that's all I've got.